Joining us are Matt Akers, aerospace and defense analyst at Wells Fargo Securities, and Richard Safran, senior aerospace and defense analyst at Seaport Global Securities. Matt, let's begin with you to make the bear case here, and then we'll hear from Mr. Safran on the other side of the argument. It does seem like a tough time to be making a bull case for Boeing. Why do you say it's time to sell?
Yeah, sure. So I think, for a couple of years, the case to be bullish on Boeing is that they're going to fix production, then the stock's going to sort of move higher. And so we don't think that's really the debate anymore. Now we should be looking at the balance sheet, right? That's what it's about. They've got $50 billion-ish of net debt on the balance sheet. Call it $75 a share. Most of the difference between, I think, the bull case price targets that are $100 higher and ours is mostly that difference. But if you look at it in the next couple of years, we're below on cash, right? Whatever resolution they reach with the union, that's going to hit costs for the next couple of years. These charges we heard about on Friday at Defense are going to hit cash. 777X development is going to take longer. All these things are going to move numbers lower. And then as you get out to the back half of the decade, eventually we're going to have to invest in a new airplane. And that's basically going to be peak free cash flow, right? So I think you usually don't put as high a multiple on free cash flow at the peak as you do as sort of mid-cycle earnings.
So what about the possibility of a capital raise? Is that something that you're anticipating they will have to do? And that usually does not help the stock.
Yeah, I don't think it's a good thing. I think some people are pitching it as sort of a clearing event. Once that's done, stock can move higher. But look, I think they'll definitely have to raise money in the fourth quarter because as you get into Q1, typically that's an outflow. Q2, they've got a big debt maturity they've got to pay off. So I think definitely they've got to do it. And to be clear, let's say they assume, we raised $10 billion here. That's what we're assuming. I think that's pretty much consensus. That just kind of is a drop in the bucket for the whole balance sheet, right? There's a lot of work left to pay down the remaining debt that's due after.
Richard, let me turn to you. And to be clear here, you are among the majority of your fellow analysts who have this company rated a buy or a hold, at least not a sell. Why do you see this? You give three reasons why you think now is a good time to buy Boeing.
Correct. So first off, it's not unusual for me to be, it is unusual for me to be in line with my peers. So point one. But I think there are three reasons, as you say, to buy Boeing here. I think there have been two catalysts that people are looking for. Both have been mentioned, an end to the strike plus an equity raise. I think with the charges that were taken on Friday, a lot of bad news now is already priced into stock. But most importantly, I think, and where I agree, is that this is all about the free cash flow story. And I think that the street's underestimating the free cash flow story. For example, with respect to a new airplane, I think, Boeing spends about $2 billion on R&D. I think they are going to have to launch a new airplane. I think this occurs somewhere around 2027 or so, et cetera. I think if you look at a new airplane cost at roughly $17 billion over 8 years, that's about $2 billion a year within Boeing's R&D spend. And, oh, by the way, at the point in time that they launch this new airplane, you're going to have the 777X presumably be delivered if Boeing holds its current schedule, so no R&D there. And the MAX R&D drawing down as well. So I don't see a new airplane, for example, being an incremental drain on Boeing's cash flow. I think all this translates to a good opportunity to buy the dip. Here. In general.
Am I being too harsh, Mr. Safran, in saying that when Boeing recently has introduced new airplanes, it hasn't always gone all that well, and they've had cost overruns and other related issues that have ended up costing them more than anticipated?
Not only are you not being harsh, you're being very realistic. So the 787 by all estimations was a debacle. And there were a couple of reasons for that. A new business model that Boeing isn't likely to repeat, where they put a lot of effort, a lot of work to suppliers that they shouldn't have. I think that Boeing estimated the cost on the airplane. There were all kinds of issues with it, et cetera, including concurrent technology development. The new airplane is one of the things that Boeing is very good at is taking lessons learned. And I think any new airplane that Boeing develops is going to have far less risk than what we've seen previously.